την ελληνική κυβέρνηση να επιζητά το ταχύτερο δυνατό την αναβάθμιση της χώρας στην επενδυτική βαθμίδα, οι ανακοινώσεις των οίκων αξιολόγησης έχουν αναδειχθεί σε καθοριστική σημασία για την πορεία της ελληνικής οικονομίας. Η Ελλάδα έχει αναβαθμιστεί επανειλημμένα τα τελευταία χρόνια, παραμένει όμως εκτός επενδυτικής βαθμίδας και έτσι στερείται την πρόσβαση σε μια μεγάλη και κρίσιμη μάζα επενδυτών. Μεταξύ των τριών μεγάλων οίκων αξιολόγησης, ο Οίκος Fitch κρατάει την Ελλάδα ακριβώς ένα σκαλοπάτι κάτω από την επενδυτική βαθμίδα. Το Euronews μίλησε με τον Φεντερίκο Σαλαζάρ, διευθυντή του τμήματος Αναπτυσσόμενης Ευρώπης του Οίκου Fitch, με αφορμή τη συμμετοχή του στο Fin Forum 2023 που διεξάγεται υπό την αιγίδα της Ελληνικής Ένωσης Τραπεζών, για να μάθουμε αν και πότε η Ελλάδα θα επανέλθει στο κλαμπ των αξιόπιστων πιστωτών.
Mr. Salazar, thank you for this interview to Euronews Greek. Greece has been expecting its return to investment grade for quite some time. Do you think it is something that might happen in 2023 by any rating agency?
Well, I can only speak really for what we can do, and Greece at the moment is at a BB+ with a stable outlook. So it is really at the cusp of investment grade. We have an additional review in 2023 in December, and we have highlighted really the areas that we would consider in the event of taking positive rating action. And these are particularly around the public finances and the trajectory of medium-term public debt, and also an assessment around the potential growth of the Greek economy, given the performance in the last couple of years, and also importantly, giving the reforms or the upcoming reforms that need to be implemented to boost potential growth going forward.
People in Greece wonder why does it take so long for the country to return to the investment grade, and if it's really that important.
The trajectory of Greece's rating has been quite positive, and in the last couple of years we have upgraded them multiple times. Because you have to remember that the rating was close to a default level at some point. So there's quite a lot of notches from there to investment grade. And one of the things that has obviously held back Greece for a long time is the level of public debt. The level of public debt is the second highest in the developed markets after Japan. And although it has been coming back down again, it unfortunately went up during the pandemic. So this is one of the key indicators that we look at, in addition to debt sustainability, of course, and how much public debt affects financing conditions, etc. Now, that's exactly why sometimes the investment grade is important, because it allows a more diverse and wider investor base. And there are some regulations, in this case at the EU level, for example, that in the past have only been available to countries that have investment grade. So it's even some sort of a policy anchor per se.
The last publication from Fitch on Greece was in June, and you kept the country at BB+ with a stable outlook. What kept you from upgrading the country to positive outlook like many expected?
The rating took place during the election period, and although this was after the first round when there was, I think, less question marks around what the potential final outcome might be, there were still some considerations around what could be the policy actions when a new government took place. Of course, now we have the results, now we have sort of a clearer view of what the policy priorities might have been, but at the time we thought that we still required kind of a final outcome to be certain, and not only a final outcome, but obviously for the new government to set their priorities in order for us to be able to assess them, particularly in these two themes that I mentioned earlier, right, around the public finances and public debt dynamics medium term, and around the reforms that need to be implemented in order to sustain this kind of growth momentum going forward.
Actually, the new government, the Greek government, has presented its new term priorities. Are there any points you took particular notice of? And, for example, do you think reducing public debt to 140% of GDP by 2027 is possible, is feasible?
So we've been looking at this medium-term trajectory in detail because it's sort of a similar pledge that the governments made earlier in the year when governments in Europe have to put together this medium-term stability program. And there we commented that although we think that the short-term debt trajectory is definitely going to fall quite briskly, to achieve this sort of more medium-term target could see a little bit optimistic. And there are two reasons why. One is because you're assuming that you maintain a quite sort of large primary fiscal surpluses. And second, the growth assumptions that the government is using appear to be slightly optimistic, but because they're around 3% over the medium term. That's not to say that debt will not fall quickly. And there's also question marks around more sort of the longer term debt dynamics beyond, say, they reach this 140 and 130%. But I think taken all together, the program that the government has announced is basically a continuation of what's been done in the last couple of years. And we've highlighted in the past some of the more positive aspects, of course, is this positive fiscal trajectory, but also Greece is really on track of completing a lot of these milestones and reforms under the Recovery and Resilience Facility. And there are not many countries across the EU who are at this stage. So having continuity in the government means that the likelihood of the program continuing on time is relatively high.
Mm-hmm. And you mentioned large primary surpluses. Could you define large? I mean, at what percentage you would be happy?
So the point here is that primary surpluses is what you need to maintain the public debt falling over the medium term, especially because public debt dynamics are driven by interest rates and growth in addition to public sector debt, primary surpluses or deficits. The growth trajectory has been very quick in the last couple of years, but this is also driven by inflation. So the nominal inflation helps reduce public debt. We expect that to continue this year, but that is really going to stop from next year. So that's why we still see debt falling quickly. The program of the government has always kind of targeted around a 2% primary surplus. So this is when we talk about relatively large. But the track record is there. And if you look at what they had originally budgeted last year, which was even a primary deficit, in fact, Greece posted a small primary surplus. So what that means is that you have a lot more space, fiscal space this year in order actually to reach those targets. And in the last couple of reviews, what we've done also is actually amended our medium-term forecast to reflect the fact that we believe that Greece can post primary surpluses, especially over the next 2 to 3 years.
The Greek government has pledged an early repayment of the first adjustment program loans. How does the investment community assess this news?
Yeah, so the repayments of Greek loan facilities is something that has already happened in the past. So this will be an additional time that they do this, and I think from the government's perspective, it seems to be a signaling effect, right, to show the market that they can repay this crisis era debt ahead of time. This obviously is helped by the fact that the government has buffers. They have a large deposits. They don't have really high debt maturities, and they have a relatively good debt profile. So all of that actually helps the Greek government manage debt in this way. We have highlighted in the past around kind of the medium-term debt strategy, and this is also important because it has to balance the fact that Greece at the moment has a high debt stock, so around 170% of GDP. But debt repayments are very low. Why? Because you have very long maturities and the interest rates that you pay on this kind of concessional debt is relatively low. Now, I know that the Greek loan arrangement has had some changes in the way of their debt profile, but over the medium term, you also have to ask if you come more and more to the market to raise debt, you have to balance whether that will actually alter this very favorable debt profile that the Greek government has at the moment.
So if I understand correctly, you don't think it's such an important initiative?
Well, it's an important, I think, signaling that can help the Greek governments amongst investors, but fundamentally, it doesn't really alter the debt trajectory and the debt dynamics in our point of view. And there's a similar sort of idea around contingent liabilities and use of deposits, because you can use them to reduce your debt. But this is a one-off, really. And what we really need to think about when you consider a country with such high debt levels, is how do you finance this over the medium to longer term? Even if debt falls down to 130% of the GDP, it's still quite significant, especially if you compare it to the Eurozone or to the rating peers, which is also very important for us.
In a main note, you mentioned that some of the projections of the Greek Stability Program might be a bit optimistic. Could you tell us which projections you refer to, and do you see any risks for the Greek economy?
I think particularly around the growth. So I think in the short term, we've changed our growth forecast. We made them around the 2.5%, which actually reflects some of the dynamics that we've seen in the first quarter of the year. And also our understanding that some of the economies in Europe that are more service-oriented, like Greece, are still having this dynamism. And this is really very different to some of the core European countries, like Germany and others, who are very much also reliant on industry, and they are suffering more. So Greece is clearly on a stronger growth path at the moment. But when we said that we thought it was a bit optimistic, we're talking about sort of more the medium term. So what happens in 2024, 5 and 6, when the stability program is looking at growth of over 3% of GDP. And here you have to think about what the drivers might be of that. And this really has to be driven by the replenishment of the capital stock, so investment. And in some ways, we think that there's investment coming because of these EU funds that are happening, but you also need to increase private investment. And this is sort of at the time when across Europe you have in general weaker economic conditions, weaker demand. So when we compare to that, we think that maybe the 3% mark is slightly optimistic, and we still have kind of medium-term growth around 2%. At the moment.
The next publication of Fitch is in December. Can we expect an upgrade by then?
I think by then, what we definitely will assess is a bit more of the track record for the 2023. So we will have a lot more data on the fiscal outturns. And that's actually also very important, right? Because we have to see whether the commitments of the new government sort of match what they've been doing in the past. And the second and very important thing is that we can actually sense the resilience of the Greek economy to what's been happening in Europe. So I just mentioned now how important it is to maintain stronger growth over the medium term. And there's a lot of headwinds in the European space at the moment. And I think if Greece shows that it can also implement reforms, then we might have another look at this sort of medium-term debt and growth dynamics. There are few governments in the European Union which have such a solid majority, and that really helps for political stability going forward.
So the electoral outcome is a factor you have been watching.
Yeah, of course. Absolutely. But I think already, that's what I'm trying to say, is that political dynamics is a factor that we watch for all the ratings. And we have to take them into consideration when we look at any sovereign. And many places in Europe, you have really multiple coalition parties. Some of them are falling apart, some of them are weak. And there are very few governments which have a solid one-party majority, which helps put in place the policies of that government. And in this case, Greece does have one.
Thank you very much for this interview.
Thank you.